It feels like crypto is dead. Sell all now, whatever we have left.
Bitcoin is now seeing one of its biggest retests out of its entire history.
I'm going to guess that we're going to tag this lower trend line sometime as the year goes on. It seems like a likely outcome to me.
I think it's very likely we get a break to the upside in the next few days here, which is why I think right now is a great time to start scaling into long positions.
I analysed several hours of content from top crypto influencers, including their closed forecasts and recent analyses. Benjamin Cowen, Rover, MMCrypto, Thomas Kralow, and others. Their opinions are divided. While some predict a 1987-style crash due to a diesel shortage and a war in Iran, others are promoting a bottom and a golden age for crypto in the US due to the Clarity Act. This video is empty. Just a concrete summary of 16 opinions and one answer. What should we do now? If you value your time and deposit, you can't miss a second of this video. Let's get started. Rover is warning everyone that we are currently in a news market, not a trader's market. He points out a recurring pattern. Every Monday, Trump makes a market-calling statement or mentions a potential ceasefire, which causes a relief pump. But historically, these Monday pumps lead to a dump later in the week. Rover's bigger picture is still bearish. He expects Bitcoin to hit a bottom between June and October, possibly reaching the $55,000 to $60,000 zone. He's staying in cash for now, only doing daily DCA and waiting for that final liquidation to open a massive long position. Next up, Benjamin Cowen is sounding the alarm on investor complacency. He defines it as a dangerous state where everyone ignores obvious threats because buying the dip worked in the past. Cowen points out that we are in a late business cycle environment. Look at the data. Oil prices are spiking, the labor market is showing cracks, and liquidity is drying up. Historically, these are the exact triggers for a major recession. He notes that Bitcoin market structure shifted in October 2025. We are now seeing lower highs and lower lows. Ben warns that while the market spends more time trending up in slow rallies, the actual crashes happen lightning fast, leaving those who are over-leveraged with no time to react. MMCrypto just dropped a huge emergency update from Tokyo, calling the current situation potentially apocalyptic. Chris is tracking a massive bearish flag on the weekly charts. He warns that if Bitcoin closes a weekly candle below $66,000, the probability of a catastrophic breakdown skyrockets. His ultimate measured move price target, a staggering $48,500. While the crypto market bleeds, Chris is hedging his bets by longing commodities like oil and silver, which are pumping due to global instability. He isn't shorting Bitcoin yet, but he's preparing to catch the knife and open a massive long position once we hit that sub 50,000 zone. While the market is shaking from uncertainty, the worst thing you can do is trade with your last personal savings. If you're confident in your strategy but lack the volume, it's time to trade with professional capital. Check the link in the description for Hedge. It's the perfect solution for those who want to trade with serious capital, up to $100,000 or more, without risking your own bankroll during this crazy period. Click the link, pass the challenge, and get real capital under management. This is the time for a professional approach. While many are flipping bearish, Carl from the Moon Show is going all in. He's spotting a classic falling wedge breakout on the Bitcoin chart. Carl's immediate short-term target is $75,000, with a major resistance level at $85,000, where he expects a massive bounce. His strategy is simple: buy low, sell high within this horizontal range. He believes Bitcoin has hit a major support cluster and is now starting a big reversal. While he acknowledges the risk of going lower later, he's betting on a significant relief rally to the mid-80s, keeping his long positions open on multiple exchanges. Macro analyst Jason Pizzino is highlighting a major shift. For the first time, the correlation between war news and market reactions has broken. While stocks and oil are both pumping, Bitcoin is failing to act as a safe haven. Jason points out that despite the massive money printing, Bitcoin's price is not reflecting it. He's looking at the VIX, volatility index, and seeing higher lows, which historically signals the final, most volatile stage of a market cycle. His thesis remains firm: we haven't seen the bottom yet. He expects further downside for Bitcoin throughout Q2 and Q3 of 2026, as the macro downtrend is still very much in play. Lark Davis is focusing on the 48-hour deadline involving US-Iran tensions, which could be the ultimate catalyst for the next big market move. He points out a massive ascending triangle on the oil charts. A breakout above $115 could send oil to $150 almost instantly, causing chaos in global markets. However, Lark is cautiously optimistic, holding a Bitcoin long with a target of $77,000. He notes that while gold has been leading the rally, Bitcoin is historically oversold compared to gold, suggesting a massive rotation into crypto could be next. Lark is also watching Ethereum's price channel, eyeing a breakout above $2,270 to confirm a trend reversal. Sheldon from Crypto Banter is calling this a make or break moment. He's currently staying neutral to slightly bearish for the week, but he's ready to flip hyper bullish if Bitcoin can secure a daily close above $71,000. Sheldon warns that if we fail to hold this trend line, a sharp spike down to $65,000 or even $57,000 is still on the table. He's keeping his limit orders low for altcoins like Solana at $65 to $70 and Ethereum at $1,880. For him, today is a wait-and-see day. No urgency to trade until the market confirms whether this breakout is a genuine move or a bull trap. CryptoKid is issuing a final warning, focusing on the critical 29-hour window before the US deadline for Iran. He's drawing a chilling parallel between the current Bitcoin chart and the structure we saw in January. A fakeout, a retest of support turned resistance, and a subsequent $30,000 crash. He believes that if a peace deal isn't reached by the deadline, we could see a repeat of this W structure breakdown, potentially sending Bitcoin down another $30,000. For him, the only invalidation of this bearish case is a clean break above $77,000. Until then, he remains net short, citing unpredictable geopolitics and upcoming inflation data as a perfect storm for further downside. Sheldon from Crypto Banter is calling this a make or break moment. He's currently staying neutral to slightly bearish for the week, but he's ready to flip hyper bullish if Bitcoin can secure a daily close above $71,000. Sheldon warns that if we fail to hold this trend line, a sharp spike down to $65,000 or even $57,000 is still on the table. He's keeping his limit orders low for altcoins like Solana at $65 to $70 and Ethereum at $1,880. For him, today is a wait-and-see day. No urgency to trade until the market confirms whether this breakout is a genuine move or a bull trap. George from CryptosRUs is looking past the immediate geopolitical noise and focusing on the bigger picture, global liquidity M2. He points out that while the world is distracted by 24-hour deadlines, central banks are quietly printing money at an alarming rate to support their struggling economies. Historically, Bitcoin has always followed the global M2 supply with a slight lag. George notes that billions in USDC are being minted on Solana right now, which he believes is a sign of smart money loading the boat before the next massive leg up. His message is simple. We are in a perfect storm where macro liquidity meets a potential de-escalation, which could trigger one of the most tremendous Bitcoin pumps we've ever seen. Ivan on Tech is sounding the alarm on Bitcoin's false strength. While many are celebrating BTC holding $66,000, Ivan warns that this isn't necessarily a bullish signal, it's just consolidation before a probable break. He points out that the Nasdaq and S&P 500 have already flipped into a clear bear trend, and usually crypto follows. Ivan is closely watching the oil chart, noting that as long as oil stays in a bull trend, it's mathematically difficult for stocks or crypto to sustain a rally. His strategy? Respect the bear flip. He's looking for fresh shorting opportunities in stocks like Nvidia, TSMC, and Samsung, which have massive air below them before hitting major support levels. For Ivan, the goal isn't to hope for a pump, but to protect capital and prepare to accumulate only when Bitcoin enters the true buy zone below its 200-week moving average. Crypto Casey is bringing a unique historical perspective, comparing 2026 to previous US midterm election years like 2014, 2018, and 2022. Her data shows a consistent pattern: a sharp tank early in the year, followed by a slow, painful bleed out through the end of the year. Casey points out that 2026 is mirroring 2022 almost perfectly due to similar war-driven global uncertainty. If this history repeats, she expects Bitcoin to hit its 200-week moving average at $59,000, drop below it, and reach a maximum drawdown in November before finally recovering in January 2027. Her advice is to stop chasing pumps and focus on a long-term DCA strategy, treating this bearish phase as the ultimate wealth-building opportunity for those with patience. Jacob Crypto Berry is highlighting a stark difference between this bear market and the previous one: time. He points out that while this correction feels long, it's only been about 180 days since the top. In contrast, the previous bear market lasted 378 days before things got exciting. This means we could potentially face another 6 months of gloom and doom and boring sideways action. Jacob notes that we topped on apathy rather than euphoria this time, and we still haven't touched the 200-week moving average. He's eyeing $55,000 as the ultimate appealing level, where major investors and retail might finally step back in. His message is a reality check. The 4-year cycle is still in play, but the bad times might last much longer than people's patience allows. Thomas Kralow is issuing a massive warning for the next 24 to 72 hours. He believes we are at a deciding moment for the markets. While technicals might look like a breakout, Thomas isn't buying it. He points to a global diesel and energy emergency affecting everything from agriculture to shipping. Even if the markets seem to pump on news of a potential 45-day ceasefire, Thomas warns this might be just more market manipulation by Trump to keep futures up. With Iran reportedly rejecting temporary deals and oil sitting at local highs of $109, Thomas sees an 80% probability that no real peace will be reached. In his view, this high inflation is the last nail in the financial coffin for many, and unless a miracle happens in the next 24 hours, the markets are heading for a brutal reality check. Crypto Jebb is warning about an extremely bearish setup that looks almost identical to the January crash that sent Bitcoin from $98,000 down to $60,000. He points out that Bitcoin is failing to reach key resistance levels. Last time it was $100,000, this time it's $80,000, which signals that bulls are exhausted. Jebb highlights a head and shoulders pattern on the daily chart and notes that Bitcoin has already rejected off the underside of its former uptrend. If this fractal plays out, we could see a 30% drop into the mid-40s. However, Jebb's primary target is the 200-week moving average around $59,000. He doesn't expect major bankruptcies like in 2022 because institutions have learned their lesson, but he is ready to deploy more cash if we hit the $50,000 range, calling it a remarkable buying opportunity for disciplined investors. Altcoin Daily is bringing a massive wave of bullish sentiment, arguing that the market bottom might already be in. They point to a historical 10% rule, where the stock market usually bottoms within the first 10% of a war's duration, just as it did 5 months into World War II. They highlight that Ethereum and Bitcoin are actually the best performing assets after energy stocks since the Iran conflict began, significantly outperforming the S&P 500. Most importantly, they see a generational shift coming with the potential May vote on the Clarity Act in the US Senate, which could make America the crypto capital of the world. With tokenization exploding and a pro-Bitcoin Fed chair nominee, Kevin Warsh, set for hearings, Altcoin Daily believes we are on the verge of a mini altcoin season and a major market reversal that most people aren't ready for. So I've rewatched hundreds of hours of video from 16 experts for you. Here is the final summary. 60% of analysts, the majority, are bracing for one more hit to Bitcoin, targeting the $50,000 range due to the macro shock. But remember, the market always does what the fewest people expect. Whose forecast felt the most logical in this current chaos? Jebb's technical fractal, Benjamin Cowen's macro cycles, or the moon's $85,000 target? Drop the influencer's name in the comments. Whichever comment gets the most likes will be the subject of my next detailed deep dive. Hit the bell so you don't miss it. See you at the charts.